Bitcoin is now at a 78% drawdown, trading in the mid $15,000 range, and it feels like the whole world is melting and everything's going to zero. Well, in this video, I'm going to give you a bear market prep talk. I'm going to go through a bunch of bullets that I've accumulated of questions that people have been asking me directly. Some of our investors, some people online, some people that are just, close acquaintances. And I'm going to answer the most important questions and give you my exact thought process on how I think going through these cycle lows and why it's so important, because typically when you're at the tops of the markets and the bottoms of markets, that's when people make the biggest mistakes, because that's when the emotions are running high. So this video could not be more timely. And if you get value, let me know in the comment section below. And if you know someone that is also freaking out or maybe needs some clarity or something, send this video to them, and please do them a favor to limit the amount of emotional decision making they may be getting ready or have just already made. All right, so first and foremost, I want to bring some clarity on where we're at right now, okay? Typically in bear markets, so we're looking at Bitcoin right now over a long period of time, all the way down in the bottom left-hand corner is 2013. Okay, if we were to look at the high in November of 2013 to the low, all right, this was 420 days about, okay? This next one, we came down from the high of 2017 into 2018 about 371 days. I think it was actually almost exactly a year. And right now we are sitting right around 371 days as well. So we're just over a year into the bear market. And typically the bear markets from the peak to the trough usually last about a year, sometimes slightly longer than a year. Sometimes it's 13, 14 months. And that's exactly where we are at right now, is we are sitting just over the year. So on a time frame basis, we are sitting there very close. From a technical basis, I've gone over a lot of things on this channel recently about on-chain metrics, indicators. If you were to look at just the simple RSI or the stochastic RSI, everything is pointing to a bottoming signal where we've been very, very oversold, which on a longer term time frame, these have perfectly timed the tops and bottoms of the long cycles, the 4-year cycles of Bitcoin. They've timed them pretty much almost down to the week sometimes. Usually it's within the month of when you're starting to see a bottom or very close to a bottom. Now, I'll go more in depth on other things. And if you want to go look at the more technical stuff, go watch some of my previous videos. I've talked already a lot about that. So I'm not going to go into 18 different indicators for you. But what I have not gone over this channel is realized profits. You also see, I've talked about realized price on-chain metrics. But if we look at the data, when people are at a loss, when people have extreme fear, when people have doubt, they're uncertain, the majority of their positions are at a loss, that is when the market bottoms, because everyone is super fearful. And what does Warren Buffett say, and some of the top investors of all time? Be greedy when others are fearful, and fearful when others are greedy. So what I do is I practice timeless investment strategies and implement them into this extremely volatile asset class, which I truly believe is the #1 winning strategy to deploy, because I can go over multiple scenarios that I'm actually going to touch on at the end of this video. But if you look at the realized profit right now over a 90-day time period, you'll see in the depths of the bear markets back in 2011, back again 2015, back again 2018, you see how there's red right there. You see the bunch of green, right? That means a lot of people are in profit. When you jump into the red right here in the depths of the bear markets, that's when you have realized profits that are at a loss. So people are sending their Bitcoin places, or they're selling their Bitcoin at a loss. And when you see a big red dip on this chart, that is when you're at the bottoms of the bear markets. At least that is how it is operated historically. All right. And you can see we've recently had a very big red bubble here. All right. If we were to look at from, this is Bitcoin's price growth since the cycle low. So at the very bottom left hand of the chart, you're seeing that is when Bitcoin had its previous cycle low. the chart then ends when the next low occurs. So the next low before the bull market started. So you see in 2010 to 2011 is this blue chart right here. That was obviously a shorter bull market. You saw tens of thousands of percent gains followed by like an 86% drawdown. So like this is a very short cycle. All right, into the next one though, you can see the dark red right here. This was the first like kind of real cycle that we had where we came all the way up in 2015 into a bear market. It ended. And how many days from that was the low that started the first true cycle? Well, that was just over 1,170 days. So now we're looking at the next cycle, which is number 3 right here, which is in orange, from 2015 to 2018. So this was more of a mature cycle, okay? Because Bitcoin came out and right after the financial crisis of 2008 and 2009. So like it didn't have much maturity. We're almost sitting at 10 years of maturity now into this cycle, which was the last one that bottomed in 2018. Now, how long did that take from the cycle low to where we're at now? It took about 1,440 days, which is exactly where we're sitting right now, is literally exactly where about 370 days into the bear market from the top to the bottom, and now almost the exact from the bottom to the potential bottom. So this is one of we're sitting at the longest length that we've had from bottom to bottom in the amount of days that it's taken from the previous bottom to where we're at currently. So we'll see if that plays out again. But to be honest, we're right on track with what has happened in the previous cycle and a little bit longer than what we had in the first like technically real cycle in 2015. But still, that was almost 7-8 years ago now. So it's debatable on how much emphasis you want to put on a cycle that's that far away, considering this asset class is so new. On Bitcoin's also, it's unrealized profit and loss. This is something that we talk about. If you look at Bitcoin that is not transacted, so Bitcoin that has not been sent somewhere, Bitcoin that has not been sold. If you looked at on the unrealized profit and loss, you can see that every time we dip below the unrealized profit and loss price for Bitcoin, you'll see that that's been a really great time to accumulate into the bear market of 2011, into the bear market once again of 2014, 2015, into the bear market of 2018, into the COVID crash. And now, once again, we came down in June, we came above in August, and now we're coming right back down below the unrealized profit and loss, which is typically kind of like an average value of Bitcoin is kind of how you want to look at it on Bitcoin that has not been transacted. And you'll see also, once again, on the chart here, when we're in deep capitulation, which is this green right here, which happens every time in the depths of the bear market, that is when the smart money starts to buy. So if you believe in the asset, if you believe in the industry, you would have conviction and you look at data, you would understand that this is typically when we see bottoms in this market, okay? You also see like Bitcoin's days since the last halving cycle. So what typically happens is we're quite a few ways away from the next halving cycle. As you can see, it's usually about every 4 years. It's actually a little bit less than 4 years. But where we're at right now, we're only about 930 days in from the previous cycle or the halving cycle, and it typically happens about right around 1,380 days in from the previous halving. So we've got some time. But what I want to show you here is when you typically bottom, you kind of form a range where you kind of trade in this range for usually like a year and a half, 2 years. And then the last year is where you see the exponential growth, which we saw in 2021. And you also saw that in 2017, right? So you see this happen where you kind of form this range and you trade kind of in this range for like a year and a half, 2 years. And then you see a lot of growth. So that confuses a lot of people, but it's important to understand so you understand kind of where you're at. But typically you do not see the cycle lows again, because you see a big capitulation event, you formulate the low, and then like what happened in 2018 actually. So in this region, this was we had quite a few months to accumulate, and it was a U-shaped type recovery, and everyone was saying Bitcoin was dead, which by the way, back in these previous cycles, there was way more risk because we didn't have institutions. We didn't have Meta, Starbucks, Disney, Stripe, Fortune 500 companies using blockchain technology, partnering with crypto companies, 35 billion, which is 5% of all VC capital coming into crypto just last year. We didn't see this mass adoption. We didn't see central banks coming out with their own digital currencies. We didn't see countries buying Bitcoin to store value. We didn't see all those things. So when we came to these lows at the previous cycles, everyone's like, hey, this thing is probably never coming back. Now we know almost as a matter of fact that this thing is not going to go to zero. Like when I say thing, I'm talking about the overall industry. So if you understand, like the risk has actually been greatly diminished, because back then a significant argument was this whole thing could and may be going to absolute zero. Now it's like there's so much interest and adoption, and the regulation is coming, which we know because the White House has come out recently, which by the way, I'm going to talk about at the end of this video. We pretty much know that this asset class is not going away. So if you've got conviction in an asset and you see the bottoming indicators and you've got cash and you've got, your head on your shoulders and you're in a decent spot financially, like I am putting money to work right now because at least the data is showing me to do so. Okay. And by the way, I am not perfect. I sold some at the end of 2021. I sold a portion of my portfolio. I sold at the beginning and even into the middle of 2022, but I still hold a fair amount of my assets in crypto assets, and I don't sell them because I know even though I have a lot of data points in front of me, I can't perfectly time everything. So what I typically do is I will realize some of the profit deep into the bull market, which by the way, if you don't know my story or anything, I bought Bitcoin back in 2013. Still have the Coinbase email in my in my Gmail account from when I registered with Coinbase in 2013. Bought Bitcoin, sold it in 2014. And then I started to get heavily back into the industry in 2017. And I went full time in the industry after I left my corporate banking job in 2019 and started my first fund in 2019. And now we have a family of funds, and the way that I manage the capital is the same exact way prudent investors manage capital in traditional markets as well. They're not typically all in or all out of positions because they know for a fact that this is happening. If you look at any successful investor that has had success for decades, not someone that had success for a little bit of time, for 5 years, 8 years, because they typically end up blowing up when they're all in, all out. They swing this, they use a ton of leverage. For example, if we were to look at Alameda Research, which was the investment company behind FTX, they've been megally successful over the past 3 years, 4 years. But guess what? They were able to have all that success because pretty much they had unlimited amounts of money. So they could just pull all the money from FTX customers. They couldn't do that. They fraudulently did that. They had unlimited billions and billions of dollars that they could put to work. They started new venture projects that they put a ton of money into, and then they would release them on their exchange and front run all their users. They had all the data, everything they could possibly need. And they took a bunch of leverage and they tried to get all fancy with their strategy. And guess what happened? They went to zero. Same thing with Three Arrows Capital, right? They had success for, I think it was 8 years. They had over $10 billion under management. They had this crazy strategy where they're using a bunch of leverage. They were the top traders on derivatives platforms like FTX and Bybit and all these different exchanges. And I would see what they're doing and I'm just like, that's just insanity, right? And they had good numbers. They had early stage projects. They had leverage. They had all this crazy stuff in their portfolio. And what happened? They took out a bunch of debt, used a bunch of leverage, had a crazy strategy. The complexity caught out with them and they went to zero, right? So you'll see that when the more complexity, the more crazy you try to get with timing here and timing this, and you're not using timeless investment strategies, which is essentially dollar cost averaging. And I like to weight my dollar cost averaging when the data shows to weight the dollar cost averaging. That's typically going to go heavier into it, such as this, right? When you come up on the 2-year moving average, which is this green line, you typically have a few months to accumulate. After the 2-year moving average, after you get outside of the 2-year moving average, you usually don't have much time to accumulate under that for at least another like 4 or 5 years. And we saw one exception with the flash crash of COVID, right? And you'll see that once you get over the 2-year moving average multiplied by 5, which is this red line, that would have been a wonderful time to sell some of your positions, but not absolutely perfect. And no one can time the perfect top and the perfect bottom, but you can get relatively close. And that's why for me, I'm like, hey, I'm not going to sell everything. I'm not going to buy everything. I'm never going to be 100% in, 100% out. And I understand that in a bear market, I'm going to have an unrealized loss. I'm going to have a decent sized red year, which is exactly what I've experienced. And this is a year where you build a foundational position in your portfolio to then have success into the next cycle, which is exactly what professionally I'm using this for. Personally, I'm using this for. I'm using this to build that foundation in my portfolio to then have success into the next cycle, because I know, like, if you don't have enough patience to wait for a couple 100%, 1,000% gain into the next cycle over a 3-4 year time horizon, you need to rethink how your mind and brain is operating, because that is an unbelievable return that has happened, by the way, every single time that we have been in cycles, which I'm actually about to go into the data. I also want to bring up one thing. Just with, I get I talk about short-term price on this channel. We have trading communities. We have groups like that. But to be honest, a lot of that is nonsense. And I trade with a very small portion of my portfolio. And the reason is because typically the dumb money is very short-term. If you talk to any successful investor, any successful business owner, the longer their time horizon is, the more successful they are. The shorter their time horizon is with their investments, with their business, with relationships, with anything, typically they operate like they're almost schizophrenic and they're in and out and they've got a bunch of anxiety and they're freaking out. But when in reality, the people that have the longer term horizon are more successful. And I almost guarantee that if you look into anyone that's very successful, they have that same type of mindset with whatever the heck they're doing. Could be their fitness, could be their investments, could be their business. But I want to look at what short-term holders do. So what do short-term holders do? They increase their supply when the price of Bitcoin is going up. This black line right here is Bitcoin's price. So when price goes way up, guess what they do? They buy the top. When price goes way down, they sell the bottom. When price goes up, they buy the top. And then when price goes down, they sell the bottom, which is the exact opposite of what they should be doing. Once again, in 2017, they buy the top and then they sell the bottom. And then they buy the top and then they sell the bottom. Happens over and over and over again. This is the dumb money. You don't want to be the dumb money. I don't know anyone that wants to be the dumb money. Okay. Let's also look at what long-term holders are doing with their supply. Well, let's see what the smarter, longer-term money is doing. When the price goes up, they are selling. Okay. When the price goes up, they are then once again selling into the bull market, accumulating when price goes down. See how the line goes up when the price goes down? Because they are the smart money. See, when the price of Bitcoin goes up in 2017, they sell through the strength. Then when price comes down, their supply goes way up because they are accumulating into the bear market. Same thing, 2021, they sell into strength and they accumulate into this market. And now their supply is sitting at all-time highs because we are now sitting in the depths of the 2022 bear market. All right. So I want to, the data and stuff, all of that. Then I got a lot of people with like, oh, I got this objection, I got this thought process. Let me just share my thoughts on some important issues, and not even issues, just like the current circumstances in the market and industry. If you look, Bitcoin in 2015, it had a 58,000% rally, followed by an 86% drawdown. Okay. 2018, 11,000% rally, followed by an 85% drawdown. 2022, we had a 2,000% rally from the bottom to the top in 2021. And then currently we're down 78%. So if Bitcoin, see how we had an 86% drawdown, then we had an 85% drawdown. I wouldn't be surprised if we're at or close to a bottom, but let's say that this happened repeated again, 86, 85, let's say we're now at 84% drawdown. If we're at an 84% drawdown, that would leave Bitcoin from the previous all-time high at 69K down at $11,112. So like that's kind of my expectation of where we would see a bottom is in the 11,000 type range, but I'm not trying to time that bottom perfectly because I don't know for a fact that that's going to happen. So like, am I already putting money together to work right now? Yes, I am. Am I also having a decent cash position right now between like 15 and 20%? Yeah, I absolutely am, because I want to try to get a lower average purchase price on assets that I believe in, but I'm not going to perfectly time the bottom at $11,112. So like everyone's always trying to do this perfectly. And to be honest, if you had another 1,000% gain into the next cycle, are you really worried about you buying Bitcoin $1,000 cheaper? That's really going to feel like a rounding error at that point. So if you have a long-term mindset, you got to give yourself some context, and you got to understand that like, okay, if my strategy is long-term, why am I worried about what Bitcoin's doing tomorrow? Like stop freaking out and start understanding what your strategy is. And if you have a short-term strategy, this is probably not the talk for you. Maybe you've got some revolutionary strategy like Three Arrows Capital does. Uncertainty. Does this change anything? Everyone's very uncertain right now. What you really need to understand is markets, we're in the secondary market, right? Anytime you're buying crypto on an exchange, or you're buying stocks on a broker-dealer / exchange, you are trading against other people. The only time the price goes up is when people start buying that thing. When price goes down, that means more people are selling that thing. So how do you win in the secondary market? You have to beat someone else. So when someone else is selling, you're buying. When someone else is buying, you're selling. All right? Because there's no way to sell something to someone that isn't willing to buy it. So you have to be able to do the opposite of what the herd is doing. So what is the herd doing? They're freaking out because there's uncertainty right now. No one knows what the heck is going to happen. Well, if there was certainty, it would already be priced in. Everyone, we know for a fact Bitcoin's going up 1,200%. Okay, everyone buy right here. Like, wouldn't that be wonderful? I would love for that too, but that's not how this thing works. The more uncertainty there is in the market, typically the better buying opportunity, because markets are very, emotional and irrational. So you take advantage of the emotional and the irrational by making data-driven decisions. And when everyone is very uncertain, that's typically a decent buying opportunity. And I will say, a lot of people have been talking about regulation, which is different from previous cycles. It's perfect because right now we're in the depths of a bear market. The White House came out about 3-4 months ago and said, hey, we're regulating stablecoins towards the end of this year in 2022. We're regulating NFTs and DeFi by the summer of 2023. So we've actually have timelines on when things are getting regulated. We just saw the first altcoin, library coin, get deemed a security about a week and a half ago. So the regulation is here, which can be good and can be bad. If you're holding assets that are going to be negatively impacted by regulation, that could bring the price down. But also what we need to realize, what different types of laws we're talking about, in which country we're talking about. Also, not everything operates inside the United States. The United States is one country out of many, and the majority of crypto volume is traded on Binance.com, and Binance.com does not operate in the US. So like if you look at from a volume standpoint, from an adoption standpoint, from a user standpoint, there's more users worldwide than in the US. So even if the US does make a decision, that's not the end of the day for whatever asset that is, but shorter term, it could definitely hurt price. So it's all about understanding what is the SEC, the CFTC, what are these different regulatory bodies looking for? And hey, let's try to avoid the things that are going to be negatively impacted by this. And that's why I operate in such a simplified investment strategy, because I hold a smaller portion of assets. I don't hold 100 coins. I hold like between 5 and 15 typically, because I don't I know I don't know everything. And I also know the majority of things in crypto are complete nonsense, BS, and crappy, and they have no utility. So I want to stay focused on a few. They're still going to be very volatile because that's the nature of this asset class. There's no way to have thousands of percents gains without coming down 50, 60, 70, 80%. That's how this asset class works. If you can't take the volatility, you're in the wrong type of investment. But the great thing is the regulation allows the one thing to happen that everyone wants, which is price going up. Everyone wants price going up. That's the majority. That's what 98% of crypto investors are invested, because price go up. That's why. And if the regulation comes, that's when the institutional capital comes in. Why do you think that BlackRock opened up institutional Bitcoin trading and Bitcoin trading only? Because we understand that Bitcoin is a commodity. It's not a security. So that's why they opened up trading just for that asset. But as we get more clarity on other assets, then these $10 trillion asset managers, banks, pension funds, all these like major swaths of capital will come in because they have limited that regulation risk. And that is exactly what is coming over the next 12 months. So we are right on the cuff of something really big happening. Meanwhile, we're in the depths of a bear market, which from someone that doesn't understand what's going on, that's really scary. And let's sell everything at the bottom. Someone that understands how this thing can play out, and they allocate prudently because they've done research, or they invest with someone that has done the research, they can be set up in a really, really good spot over the next 12 months. Securities laws, which I think are a big risk for altcoins. I think a lot of them are going to be deemed securities. And again, like, let's look at the library situation, ICO. They use the money that they raise to actually invest back into the business, hire people, upgrade the technology. All these projects that have massive pre-mines where the founders have a huge amount of the supply. If you launch a token and it has no utility at launch, that's a sign that it's a security. All those things I just mentioned, signs that's going to be deemed a security. So you try to avoid those types of things. FTX went bankrupt. What the heck? How is anyone going to ever want to invest in this industry again? What you got to realize is this happens with regulation, without regulation. For example, Bernie Madoff, tens and tens and tens of billions of dollars in a Ponzi scheme. He was heavily regulated. Bad actors will be bad actors. But in the US, you do have more regulation. So I typically don't hold a lot of assets personally on foreign exchanges. And also, like, professionally, how we operate is we are a US regulated business. So we do business with US regulated exchanges, which can reduce that risk because they have to hold the assets one-to-one. And we also make sure that those exchanges provide the proof of reserves. So there's ways to limit the amount of risk that you're taking. But I will say this. It's going to happen in any industry, and it will continue because some people are just bad people. But the regulation that's coming is going to help limit that, absolutely. And also, you got to realize Mt. Gox, when it got hacked back in 2014, it had 70% of the Bitcoin trading volume. FTX had 10% of the trading volume. Like, it's minuscule relative to what happened in Mt. Gox and back in 2014, 15. So you got to realize that we've seen much, much worse in this industry. And yes, Genesis going bankrupt and blah, blah, blah. That just means that they're restructuring their assets and their creditors. That doesn't mean that all of a sudden they're selling everything and everyone's it doesn't mean that everything is going to zero. Some people don't understand how the bankruptcies typically work. So we've seen worse in crypto, and did it rebound? It rebounded by tens of thousands of percents. Very similar to the internet adoption rates. If you were to look at where we're at, back in the internet, when the internet was really coming out, and we had the dot-com bubble in the late 90s, early 2000s, what happened was everyone that had their name .com was instantly worth a ton of money. Same thing is going on with crypto. We understood the early utility of the internet and what these companies could be. And some of them had some real use cases, and we started to see things getting shipped online, and Amazon was selling books online and stuff like that. But we really didn't see what we see today, obviously. We didn't expect all these crazy things like Uber and DoorDash and, to hop on Zoom calls for you to watch this video, all that stuff. We didn't expect that to happen, but it did because we saw the signs of utility. Same thing is going on with crypto. everything is going up in value, and then it has a big crash because ultimately it's still very speculative and early stage, and the majority of stuff doesn't have any utility. Very similar to how the internet was operating. If we also look on a timeline basis, we've got the internet on the top here in the 90s. You can see the adoption rate. Same thing with crypto. We're over 100 million users. We're tracking the internet almost perfectly. Like this, there's so many signs that go and point towards we are experiencing the dot-com bubble of what happened, or dot-com bubble for crypto, I should say. All right, my portfolio is down 80%. Am I screwed? Should I sell the bottom? Obviously, none of this is financial advice. I'm giving you my personal opinion, but you should probably look at the data of what I just went over and make your own decision. But what you got to understand is this is normal in the crypto space. If you haven't been through an entire cycle, which is minimum 4 years, it's very difficult to put your hands on understanding that your portfolio is at an unrealized loss of 80%. If you did lose money in the bankruptcies and a ton of money in Luna and all this stuff, you could be down even more. Okay. And that probably taught you somewhat of a lesson, which, I didn't perfectly avoid the Luna situation either. I had exposure to Luna. I sold all the way through, the bottom. And then I also, by the way, made a lot of money on Luna. So it went both ways, but I've successfully avoided all these bankruptcies, which has been pretty whack-a-mole crazy in this year of 2022. But if you're down, regardless of your situation, if you're down to 80% and you have a 1,000% gain from being down 80%, you would still double the size of your portfolio. And as I mentioned, we've had over 1,000% gain every cycle in the largest market cap asset, which is Bitcoin. If you've seen my digital assets channel, if you follow me on Instagram, if you follow me anywhere else, I've been talking about a project called Caspa. It went up 1,000% in the past 4.5 months. So in the depths of the bear market, right? So these things happen in crypto. Very normal to have 80% drawdowns followed by 1,000% gains. I've had a big drawdown in one of my biggest positions in my crypto portfolio this year, and I'm still up hundreds of percents because I invested the money 3.5 years ago. That's how this industry works. And you'll never perfectly time things. So even if you're at a big loss, it can and likely will come back if you're a prudent investor and you invest in assets that you fundamentally believe in and are actually having adoption rates by users, by developers, by institutions. Lastly, I'll leave off with thoughts on investor behavior. Stop checking prices every day. Go on offense and go figure out how to go make more money. If you would just use the energy and anxiety that you have on checking the crypto price every single day, you would probably be able to make a lot more money in your job, in your business, in your side hustle, whatever the heck you do. So if you spend that time instead of freaking out and having a bunch of anxiety on things you can't control, and you implement a longer term strategy, you set limit orders, you do research on what you believe in, or you invest with someone that's doing those things for you, take the time to give yourself a break and go figure out how to go make more money. Because ultimately, that is going to be the thing that gets you ahead. It's not you freaking out about something you can't control, but instead saying, hey, where am I at today? What strategy am I implementing? Am I done implementing the strategy? Did I set forth what I want to execute on this for my given time horizon, for my risk tolerance, for my goals? Okay, cool. Let me leave that aside, and now let me go focus on making as much money as possible so I can build a cash position, so I can invest into assets that are down 80%. Okay, a lot of people freaking out right now. The best thing to do, stop checking price and start going on offense. Also, simplifying your strategy. When you hold 18,000 coins, it's hard to relax because you don't know what the heck is going down, up, why, what's happening. How about we think about what we're holding, we do research on what we're holding, and then we say, hey, let's simplify our strategy. Let's not hold money on 18 different exchanges in 17 wallets with 100 different assets. Let's bring it down into 2 places. Maybe I've got my long-term stuff on a cold wallet, It's off the internet. Now I don't have to worry about counterparty risk. Then I've got some of my trading portfolio on an exchange that I do want to actively trade and actively manage because there's a lot of volatility and there's some opportunity. Okay. That's what I'm talking about with simplicity, is not just what you're holding, but also where you're holding to make it a little bit easier. Okay. And another point is reduce counterparty risk. I go to the gym every morning, talk to the valet guys there every day. This guy was holding a bunch of money in crypto.com. I'm like, dude, why not just get rid of the biggest risk that you have right now, which is counterparty risk? Go order a Ledger Nano X and go put your assets on the Ledger Nano X. Because here's the thing is that's what crypto was designed for you to be able to hold your own property. Even when you go put money into a bank, guess what happens? They lend it out 10 times. And legally, they don't even have to hold $1 that you deposit. They can go lend that out a zillion different times. So if everyone went to the bank and said, give me my money, they wouldn't have the money to give to everyone because they don't keep the money there. They go lend that out through mortgages, credit cards, auto loans, all those things. And all it is an IOU. You are not guaranteed to go get your money back from a bank. It's exactly, it happens in traditional finance as well. It's no different in crypto, but now you have the option, instead of holding a massive stack of cash under your mattress, you can now hold it on a little device and hold your own keys to your crypto, which if you want to know, professionally, we use third parties that allow us to use multi-sig wallets on some of our positions that we're not actively managing. And then personally, I use a Zero wallet from Ngrave, which there's no affiliate links, there's no nothing. I just use that wallet. You go do your own research on whatever you want to hold. The last thing I'll say, the more emotional decisions you make, the more terrible of an experience you're going to have with your investments. So when you start to freak out because prices is going down and your Uncle Rick at Thanksgiving dinner said Bitcoin's going to zero, and then you sell the bottom and then you buy the top in the next cycle, it's because you're making an emotional decision. Look at the data, which I've gone over a few of them. I talk about data all the time on this channel, but look at these types of things and then say, okay, given my strategy, risk tolerance goals, all of that, what makes sense for me? Because what makes sense for you doesn't necessarily make sense for your Uncle Ricky. All right. Thanks so much for watching. Let me know if you got some value in the comments section below. Happy bear market, happy Thanksgiving, and I'll see you on this next video.